All right, guys, just gonna wait a few minutes, let some people hop on real quick. Let me throw the link in Telegram real quick. If you're watching the recording right now, skip in about a minute or two once I start talking about the market. All right, just posting the link everywhere. Alrighty, everybody. If you're here live right now, just hang out for just a couple seconds. We'll get started in about a minute here. Alrighty. About another 30 seconds, guys, if you're watching live right now, and then we'll go ahead and get started. Definitely recommend making sure you have something to take some notes with. What's up, guys? If you have something in the live, or if you have something that you want me to look at, throw it in the chat. Jordan, what's up? Michael, what's up, man? Don't forget to smash that like button, guys. Helps out a lot. Definitely have a lot of value, I think, just like straight up value to provide you guys this week. So I'm pretty excited. We'll get started in just a couple seconds here. I'm assuming you guys can hear me pretty well. Cool. All right. Yeah. Currency, Euro, GBP. I will take a look at that. Gold, GJ, UC. I will be looking at actually all three of those. All right, guys. Well, let's go ahead and get started. Welcome to my Sunday weekly outlook, guys. So this is going to be the weekly outlook for December 15th through the 20th. Currently Sunday, December 15th. Hope you guys all had a good weekend. I hope you guys are ready to crush it this week. I don't know about you guys, but me and my students have been absolutely crushing it this month. I'm sure if you've been following me on Instagram or you just see the track record, my FX book, you'll see that December has been a really, really good month for us so far. And I'm expecting it to continue trending upwards. So let's go ahead and get started with this week. As far as the economic calendar goes, I don't really have a whole lot. I mean, there definitely is a lot of high impact news. I mean, we can see red folders hitting all week. We can see a bunch coming out tomorrow. Tuesday, not a whole lot. Wednesday is some more red folders. Thursday's got a couple more, and Friday's got a few scattered throughout. Nothing really sticks out too much this week. So, just make sure that you're aware, as usual, get yourself accustomed to looking at the weekly or the economic calendar every week if you don't already do that. I will just say maybe a couple notable things is that there is a few interest rate decisions this week. So Wednesday, or maybe it might be different timing or day depending on where you are, there is interest rate decision from the Bank of Japan, and then following that, there's going to be an interest rate decision from the UK for the pound. Okay, so 2 interest rate decisions this week among other high impact news. But what I really want to talk about is the dollar. All right, I want to take some time and really, hopefully just give some more added confidence and backing behind what I've already been saying. I really hope that if you guys are here on these weekly outlooks, that you guys are here on a consistent basis, because if you have been, you should be making quite a bit of money. I know last week last week I was gonna do a weekly outlook, but I was in Texas, and between complications traveling back and appointments running longer than expected, I wasn't able to do one last week. But if you had the week prior to this week before and all the weeks leading up to it, pretty much for the past couple of months, I've been looking to short the dollar. And just so maybe some of you guys just catching maybe you haven't caught the past couple of weekly outlooks, so you don't really know what I'm talking about, just so you guys know that I'm not bullshitting around. I actually want to start off with USD CAD and just quickly point out this setup. This is a free setup I posted out. It's inside of the Telegram. If you're not part of the Telegram, make sure you check out the link in the description of this video for the free Telegram that you can join. I post all sorts of good stuff in there, just like setups just like this. So you'll see this is from November 26th. Okay, so this is from a few weeks ago. Still very relevant because this is a swing setup. I spent quite a bit of time breaking down this trade. I even, on one of the weekly outlooks, I went over all of these different points. I think it was the 2 weeks ago is when I went over this. But anyways, if we load what's happened, you can see that USD CAD has followed through nicely to the downside as expected. We did not continue higher from here. This was the final level or final area of resistance on that pullback on USD CAD. So really nice to see this setup continuing to play out. So just so you guys know, in my opinion, at least, USD CAD has a lot more downside to come. Okay, and I'm going to also go over one other thing right now, which is oil. All right, oil, just this rough resistance line, right? This is no line in the sand. This is just a general visualization for you guys, so you can see what I'm looking at. So there's this resistance that we have here on oil, which I'm expecting to break, and you can see that where we're at right now is 59.84. So we're just sub $60. We actually broke $60 last week. I think we're going to get back above $60, and this push on oil is going to help push USD CAD lower, right? Strong oil and demand for oil increasing in value or in price means that the Canadian dollar is doing well also. So lots of downside to come for USD CAD. So just, be really weary about what you guys see online. I mean, as obviously, I'm not talking about day trading, guys, right? If you're counter trend trading, day trading, like scalping, little things like that, that's fine. But just don't get too caught up in the scalping. I tell my students this all the time, is don't get too caught up in that day trading that you forget the big moves, that you forget the actual move that's happening to the downside. Okay, and that's going to continue happening to the downside. So USD CAD moving nicely, as I have been predicting it would for weeks now, and it will continue. And if you guys want like a very specific target, my first target is 129, and that's a level I've been talking about for a very long time. You can go scroll through the history in the free public Telegram, and you can see I've called out 129 on USD CAD many times. So 129 still intact, or target is still intact. Okay. Let's move up the list. Let's look at pound yen. So pound yen, I'm going to give it a little bit of special attention just because of what happened last week, which is this move right here. So this is the hourly chart. Hopefully you weren't sleeping under a rock last week. And if you were, then this is going to be the first time you hearing about this. There is a 400 pip move on pound yen in 1 hour. This was due in part to the elections. If you guys don't know, there's the UK general election last week. So Boris Johnson did actually win. I mean, that was what was projected to happen. So very interesting move to the upside though on pound yen. And this is something that I'm not here to like brag or boast. I'm just simply stating the facts. And what's true is that I've been literally calling pound yen, and it's like you guys can go to any of my recordings right after this. So you can even do it right now. You could stop watching me right now if you want this live. Come back to it if you want and go watch any of the recordings, and you'll see anytime I've talked about pound yen in the past 2 months since it first started this consolidation, that I've been targeting 148 to 150. Okay, 148 to 150. That was the target. And now I will say that I was not expecting it to happen so quickly. A 400 pip move in 1 hour last week was not what I was expecting. I thought it would be, maybe like a good 2 more weeks at least. I know until pound yen moved, but it was very clear. And this is another great example of what I try to say when, how I just talked about is don't lose sight of the big picture, right? Sure, you could have, maybe had some counter trend trades in here, whatever, if you were scalping or whatever, that's if that's your cup of tea, but don't get lost in the big picture. The fact that in short, I'll put it this way. Pound yen has not been in a 150 pip bull, that tight of a bull or bear flag, just that tight of a range period for that amount of time, which was a little bit over 1 month in the past decade. Okay, you can scroll back on pound yen and you can look and scroll all the way back, and you can see there's not a single time in history in the past decade, actually more than a decade. You can continue scrolling as far as the charts will go, which is back to 2003. You won't find a single point here on the chart where the markets consolidated for as long as they did, for as tight of consolidation as they did. So, specifically last week, I know I saw a lot of people on social media when we were like in this area calling shorts on pound yen. And it's like, there's absolutely no way. Like, that's such a small extension for such a big period of consolidation. And given the fact that the extension prior to this consolidation was so large, you should automatically be looking for an extension, a second extension similar to the first extension. And that's exactly why my targets were at 148, 150, because it's just what makes sense. So, I would categorize myself in the people last week that this move was not surprising at all. I mean, this is expected, like I said. So I was not in the category of the people running to social media freaking out with blown accounts because pound yen, because they over leveraged and didn't place stop losses, counter trend trading, and blew their accounts on spikes, right? And that happens. That's a part of trading. So you have to, just kind of watch yourself when you're trading. But that's pound yen. As far as the retracement, and a lot of the pairs retraced last week, by the way. So just to look at USD CAD, so it made a quick retracement at the end of last week. This was the tail end of the London session, getting into the New York session, and then as the market closed, we kind of trickled a little bit lower, and then that's where we are right now. So there's a little bit of a correction there. Pound yen obviously corrected here nicely. It went from 148. I know this doesn't look like a lot, but keep in mind it's because of this 1 hour. This is such a large 1 hour candle here that it kind of distorts how big this move really is. But this retracement is actually like a 300 pip, not quite 300, a little bit over 200 pip retracement from the high to the low of this correction. So I'm still overall bullish on pound yen right now. I think it's going to continue to trend higher, to actually moving up. It did actually break 148 just barely, or it got like a couple pips off of 148. I think it's going to move back into there, probably come and touch the yearly highs. But this pair, in my opinion, is done and dusted. I've been calling it for months, since October, since we were in this consolidation, that this is where we would go. So if you didn't catch any pips on the upside, don't chase it, right? USD CAD, on the other hand, though, I will say, just to go back to it very quickly, it's definitely not too late. It's definitely not too late. Okay. I had entries literally at the top here that I closed in profits somewhere around here. I don't know. You can check the MyFX book for December. I'm up a ton of money, up a ton of percent, a ton of money, ton of everything for December. So it's been really good, and I'm looking to continue capitalizing on USD CAD. So I'm actually going to uncheck pound yen right now, because I don't want you guys to get it misconstrued thinking that I'm trading it. Okay. So I'm just back on the sidelines of pound yen. I just wanted to cover it on the webinar today. Euro USD, I think, is important to talk about real quick because, and this is just my opinion. And again, everything said is just my opinion, guys, not financial advice or anything, just my opinion. I personally think, in my opinion, even though that there's this big exhaustion candle on Euro USD, I am bullish on Euro USD. Okay. The key, I spent a lot of time on Friday with my students on our Friday webinar talking about on our weekly recap, talking about this level, okay, this green level. And I highly recommend that you guys all have this green level here. To some of you guys, it might be obvious why I have this level here, just visually looking at it. Others, you guys might not know, might not be as clear, but there's a reason I have it here. I'm not going to go completely into it because it's a weekly outlook. I'm just trying to give a little quick input on all these pairs, but this 111 zone is very important on Euro USD. Okay, and the fact that we are above 111 right now is good. Okay, we are at a pivotal area though. You know, we aren't much higher than 111, so I'm gonna definitely watch. This could be a small pullback because I do want to look at the dollar index too. Because remember, the dollar index and Euro USD do the inverse of each other, and I just want you guys to take a look and remember this giant channel that the dollar, I've been posting all about this in Telegram too, this giant channel. I post all sorts of screenshots about this channel. In last week, here's the wick. We actually broke through this channel. Now, what's important though is the actual close, right? Is that confirmation, is the daily. Look at on Friday. Friday, after a whole bearish week on the dollar, we had a really big surge in buys at the end of the week, and the dollar index ended up creating a wick and miraculously closed above the support of this channel that we're in. So this week and this week, next week, the upcoming weeks is definitely going to be setting the tone for the dollar. I am bearish. Okay, I'm just telling you guys right now, I'm bearish. I have been looking, I'm going to be honest, guys, I've been looking for major dollar index downside. I mean, since last year, right? I remember around this time last year, we were expecting a big sell-off on the dollar index, but no, that didn't happen, right? This year, we just saw the dollar index decide to continue to range, trickle up higher. I wouldn't even really say trend higher. It was mostly a sideways year, but you know, when I talk about trending, I'm talking about like, you know, some of you guys, I'm not trying to chastise any of you guys or anything like that, but like some of you guys haven't really been in the market long enough to really experience like what trending markets are like. Like go back to 2017, you know, and look at this big trend that we had 2014 and 2015, but you'll see like, or actually 2014, but you'll see there's some years where market really doesn't move, like 2015. 2018 kind of moved a little bit, but 2019 was mostly sideways, small little movement to the upside. But I believe 2020 is going to be a pretty strong trending year. But yeah, I'm expecting downside, and on a first break, like on the first confirmed break of this downside, once we pick up some momentum, as I believe we will, my targets are going to be 93.20. Okay, back to the downside at 93.20. You know, I've been doing these weekly outlooks for 3 years now. You can find over 100 of these weekly outlooks that I've done since 2016, and you'll see literally I've had the 100.50 and the 93.2 level marked off. You can go like anytime I've been analyzing the dollar index, and I've had it there since, I don't even know, since 2016, since the market was in this area, since 2015, 2016. Okay, so it's been there for a very long time. So we'll come back to that when it becomes more relevant, but I am bearish on the dollar. I am bullish on gold. Okay, I also made some really nice money on gold. I think about 7% last week on gold. Buying gold, I am very interested in buys on gold. It's been in a wedge for quite a while, so you can see the wedge pretty nicely on the weekly. And you know, just kind of similar, take that same principle with the pound yen, right? That pound yen with that bull flag and having such a strong extension. you know, we had such a strong first extension on gold. I'm expecting a big push to the upside on gold. Also seasonally, you know, one thing I want to point out just from the sidelines is if you actually go and look at the beginning of the years on gold. So look at this. Let's just quickly take what we can see on the chart right here and look at the beginning of every year. So here's the beginning of this year. Here's the beginning of 2018. Here's the beginning of 2017. Here's the beginning of 2016. Let's see, where's 2015? Yep, there's the beginning of 2015. So you can see, look at that, December 29th was at 1185. And then first 2 weeks of 2015, gold shot up. Beginning of 2014. All right, gold has a strong tendency. Obviously, you guys get the picture, right? Gold has a strong tendency at the beginning of the years to have a bullish run. So that's just another nice little thing to add as confluence to this trade. But yeah, so gold bullish, Euro USD bullish, dollar index bearish, USD CAD bearish. Let's see what else. There was some stuff in the chat. Okay, Euro GBP. Okay, pretty simple. Euro GBP. I am bearish on Euro GBP, just as I actually literally unchecked Euro GBP, uncheck marked it just before the webinar because I think I covered it 2 weeks ago, calling that Euro GBP would continue trending lower, right? If you guys don't, those of you that trade Euro GBP, if you don't already use pound dollar GBP USD to help you trade Euro GBP, you're really missing a really helpful thing because they do the exact opposite. Well, not the exact, but pretty much the exact opposite of each other. Watch, look at Euro GBP, and then there's GBP USD. Matter of fact, even if you want to even get we could actually compare. So Euro GBP and then GBP USD. Let's just throw them on each other. So yeah, there you go. That's literally an inverted chart of each other, right? So the line is going to be pound dollar and Euro GBP is going to be Euro GBP. I mean, the candlesticks is going to be Euro GBP. So look at this. Look at this. Anytime Euro GBP is spiking up, pound dollar is going down. You have this downtrend for Euro GBP. Pound dollar moves down. You have a little bit of a correction right here. That's the correction right here. Then you have a big spike down, which is a big spike up. So these kind of cross, and then you have pound dollar kind of consolidate for a little bit before breaking out, and you have Euro GBP consolidating for a little bit before breaking out. So it's just like looking at, similar to looking at like Euro USD and the dollar index, or Euro USD and USD Swiss franc, right? Two pairs that have a strong negative correlation to each other because they both have a currency in them, right? Which is the pound on both of them. The only difference is euro and the US dollar on each of them. But yeah, so the reason I bring that up is because of just the correlation with everything. I am bearish on the US dollar, okay? So I'm bearish on the US dollar. That means I would not be interested in doing anything but buying pound dollar. So that means I have to be bearish on Euro GBP, okay? So therefore, I am bearish on Euro GBP and will expect it to continue going down much further. And for those of you guys that do like trading Euro GBP, I would highly recommend make sure you have these levels on your chart. Okay, I only have 3 things that I want you to make sure you have on your chart. Okay, which is the major swing fib levels. Okay, so that way you can see where the 50% level is, which we're coming up to. That's definitely where price is moving towards. Okay. And those of you guys that are you guys watch these weekly outlooks all the time, you'll know that Euro GBP was very relevant at the end of 2017 and 2018 when we were originally in this area, long before any of this happened. When we were sitting right here. And at that time, what I found was interesting was that on this retracement, which you can see right here, that the 38.2% just happens to also be perfectly this really significant level of support from before. And then also the 23.6% was a pretty strong level of resistance. You can see it touched right there, right there, right there, consolidated a bunch right there, and then major support right there. And originally, if we kind of zoom in, originally, this is how long this fib level has been here. It's been here since early 2018, because originally when we broke through this level right here, you see these 2 weekly candles. I was expecting Euro GBP. This is a good example of where I'm not perfect all the time, right? I can be right a lot of the time, but sometimes I'm just not going to be right with my analysis. And I thought Euro GBP, because it broke such a strong level of support, it would crash down to 38.2, which little did we know that did not happen. It decided to stay above, come back up and stay above 23.6, come back and retested a few times before finally actually making the official break, retest, came back down into that zone, and then went a little crazy. Anyways, I know I'm kind of getting off on a tangent there, but what is important is the 50% retracement level, okay? So, I mean, I think that it's a very, obviously, half of a major swing level, multi-year swing from 2016 lows to this yearly highs. You know, that's a big deal, right? So that's going to serve as a pretty significant level. So that's what I'd be looking at on Euro GBP. Let's see. All right, guys. So I see some good comments and stuff. Nice participation activity in the chat, guys. Thank you so much today. I hope I covered all of the, you know, everything that you guys wanted me to cover. Appreciate you guys. Make sure you stay safe trading out there, guys. Remember, just as far. Oh, also before you guys leave, hold on a second. I forgot to let you guys know. My enrollment for my next 6-week class has opened up. Okay. You can go to positivetraders.us, not .com, positivetraders.us/bootcamp. I think there's only 7 spots left or 6 spots left. I only do 10 people per class. The next class I run will be sometime in April or June. So it's not like I'm pumping out these classes every single month or anything. It's something limited I do. The last one was a major success that I did, and that's why I'm continuing to do these. So make sure you check that out. But also, aside from that, guys, it is December 15th. Okay, we are getting to the end of the year. If this is your first year trading and you've never gone into an end of year trading experience before, just know that liquidity does get pretty thin at the end of the year. And that's because the institutional liquidity and institutional volume that gets poured into the market isn't all there, right? It's banks closing, bank holidays, people taking breaks, and that's just what it is. Okay, so usually what I do and what I've done pretty much every single year for the past couple of years is I don't trade at all the last week of December and the first week of January. And I will say that it has definitely saved me, because last year there was a flash crash. You guys remember that? It was I literally remember it because it was like the day I was moving into my new place. I remember there was a flash crash. Everything crashed. I mean, you can just like literally look at like go to the charts beginning of this year or whatever. Somewhere. I don't know. You guys know what I'm talking about though. Beginning of this year, January, it was literally like it was the first business day that the markets were open. There was a flash crash. Everything moved like crazy. Yeah, you guys, if you were here, you know what I'm talking about. So that protects you. So just a word from the wise, word from the experience is, just be careful, guys. There's no rush, right? Trading is not a race, right? It's a marathon, right? There's no competition. There's no need to compare yourself to other people or compare yourself to how much money you're making versus somebody else. That's pretty toxic, and it can lead to you making some irrational decisions. So don't compare, be the death of your trading. Just stay on your grind, stay on your, on your path. Make sure you're in my Telegram so you can get all the free value that I'm going to be pouring out coming into the new year. And again, if you are interested in my bootcamp, go to positivetraders.us/bootcamp. You have more questions on there too. There's a link on there for you to schedule a call with me. You can hop on a quick 15-minute call with me if you want some more information, but I've tried to make the website as informative as possible, even including some video testimonies from past students and whatnot. So you can get a really good feel of what to expect if you were to participate in something like that. But other than that, guys, I appreciate you guys. Thank you so much for you guys' time. Have a great rest of your week. And students, I will see you guys tomorrow for the daily webinar. Everybody else, I will see you guys on next week's Weekly Outlook. Take care, guys. Have a great week.